Welcome traders, I am Adam Harris, Chief Market Analyst, and I'm recording this for the week commencing, I think it's Monday the 19th of August. So just having a look at the economic calendar. So looking at the CPI for the Eurozone, the Consumer Price Index is always a crucial kind of indicator for understanding inflation trends in Europe. The July report shows a slight increase to 2.6 from the previous 2.5. If that's the case, so obviously that then suggests some ongoing inflationary pressures, and we'll see if this then influences the ECB's policy stance, kind of potentially impacting the euro-dollar pairs. Then if I have a look at the FOMC meetings, be watching that for any hints regarding any future interest rate movements. Obviously, recent economic data has been mixed, and the market is kind of eager to discern what the Fed's perspective on inflation and growth is. And, this release could obviously then add to some sort of increased volatility, especially around dollar-related pairs. Then having a look at the UK PMI data, the forecast obviously suggests a stable but not overly strong growth, and just any surprises here could obviously potentially impact the pound, obviously, especially given that the market's sensitivity to post-Brexit economic performance. So we'll see what happens there. Then I'll be looking at the initial jobless claims out of the US. These claims have obviously been hovering around the same level, but if there's any unexpected changes, this could then obviously influence the market's perception of the US labor market strength, and obviously then potentially affecting equity markets and the dollar. And you've just seen how the last couple of weeks, how the market can behave and respond to that type of information. And then, of course, I want to finish that off with the new and existing home sales. The housing market's a key sector for the US economy, obviously the global economy as well, but the sales figures are a good barometer of economic confidence. And so we'll see what the forecasts of new home sales show, if there's a slight increase, which could be seen as a positive sign for economic stability. All right, and that is pretty much everything that it deserves my attention in the upcoming week. From a technical perspective, it's really about managing around that volatility and then seeing how the market sets itself up after that, if there's any changes in trends or consolidation or any reversals. Next up, obviously, clearly the biggest election in our lifetime is coming up on the 5th of November, but really, obviously, we won't really hear all the stats and the results, and the votes they'll still be counted for a couple of days potentially, so we won't really get a sense of how who's winning. But what I did want to bring in here is 538 is one of them. So there's real clear polling, there's 538, and there's several others, but 538 is generally relatively reliable, and so we could see here that we've got a relatively solid lead by Kamala Harris at 46.3, and then Trump is sort of slowly starting to drip away. So at this time, it's a close race, but it looks as though Harris has got the lead, which means largely that the existing policies plus any new policies would likely take place, which means that if she did win, we would see a continuation of the strength of the economy as we've seen over the last 4 years. Inflation under control, low unemployment, taxing the upper 1%, so to speak, and usually probably reversing that policy, kind of giving tax breaks to the middle and lower class, supporting kind of the majority of the population, the 99%, rather than kind of handing it all over to the 1%. Now, don't get me wrong. I mean, I believe that everybody here should always obviously have that ability to target developing, improving their lives, becoming millionaires. But there's something that changes once you become a billionaire. You're so far removed from the rest of the planet that it doesn't really make sense. But so I'm always kind of watching out for where that balance in everything is. It's just kind of who I am as a person. Anyway, that being said, let's go to the charts and see what is happening there. But I will be monitoring this as we go towards it. And if we maintain a 5 to 7 point lead, then it becomes pretty much a certainty. Whoever has got a 5 to 7 point lead, if there is such a lead, is pretty much a shoo-in as to who that person is, which administration is going to win. Okay, so first up, we'll be having a look at the VIX. Now, for any of you who are not familiar, because of course I realize I just assume most people know what the VIX is, it is a volatility index. It's a measure of expected stock market volatility, and it's often called the fear index because it reflects investors' expectations of future volatility. So how does it work? Well, a low VIX number, which would be below 20, would generally suggest a calm, stable market, and a high one above 30 would suggest turbulence turbulence or maybe investor anxiety. And so if it's rising, we can imagine that the market is starting to get a little bit on edge. And if it's calming down, obviously we would expect the same with the market. So, sometimes in trading, investors will use the VIX as a contrarian indicator. In other words, buying stocks when it's high, which would be market fear, and then being cautious when it's low in terms of market complacency. But for me, it's pretty much straightforward. It should be expected to be calm. It should be, because that's the normal state of things. It's rare for it to be volatile, and we had a recent spike. This was a notable spike. In other words, it was significantly high. The last time we had something that was sort of close to these highs or just a little bit beyond that was during COVID, when the market had a bit of a panic, global markets, and then, of course, the 2007, 2009 global financial crisis. Between those, we've had a couple of spikes here and there. But overall, the market tends to operate relatively low. You can see, although it did have a little bit of a shift a couple of weeks ago, it's come right back down into the low numbers here, down towards 15, and therefore it just isn't worth mentioning until it starts to spike up. What I do think is worth mentioning was the speed at which it spiked up. This one, literally just a matter of days, whereas it can often take a couple of months to head higher. So that was interesting. But then again, it makes sense. Everybody's on their phones and on their computers. We've become far more responsive to market and therefore, responding to shifts in the markets and computerized as well. So things will happen a lot faster these days. Okay, point is, market's nice and calm and happy. Let's go and have a look at the dollar index. Okay, so dollar index, it's a little bit, not necessarily that obvious to see it here, but it is stuck in a range. So I'll highlight the range for you so that you can see it. We are stuck within this range over here. We are currently heading down towards the bottom of it at this point, which is around about that 101 mark, possibly the 100 level over here at its extreme. So my expectation for now is that we will continue to see that dollar weaken, at least within this range. We'll see if it does find support at the bottom of the range and then work its way back out to the top. And if that is the case, then it makes sense that the euro dollar would continue to rise to the upside. So if we have a look at euro dollar on a monthly basis, you can see it is still stuck within its range, but right now it's at the top of that range. And actually it's also, this is where it gets interesting to me, visually at least on the weekly basis, it is sitting within a triangular shape or a pennant shape, which means that we've got a series of lower highs as well as a series of higher lows. Let me say that again. Lower highs as well as higher lows, and we can see prices are starting to get a bit squashed, but it is looking very much as though it is going to break to the upside. And actually, until it breaks outside of this range, it's not worth taking seriously, but it is looking as though it's absolutely this week going to be testing those levels. MACD has also turned bullish. So right now the momentum is certainly and it's reasonable to expect that euro dollar could continue up, and if it does, then once it breaks through this, I would expect it to immediately work its way up to 1.1250 as far as that, and that would provide some really good opportunities for day traders. Okay, so if we have a look at sterling, sterling is also looking very nice and bullish. We see some really nice strong moves here. If we look at it from a weekly, again, it's a very beautiful, well-structured chart. You can see a very nice uptrend. Price came back, tested a level of resistance, found support, and immediately started to work its way up. So the pound is really strong at the moment. Relatively speaking, it's stronger against the dollar than the euro is. We look here against Aussie dollar. We can see Aussie dollar at the bottom of its range, working its way up to the top. So that's also would make sense for it to continue up this week. So weaker dollar moves make sense. Kiwi dollar as well, very strong bounce off the bottom. They're working its way up. There's clearly some strong resistance there at 0.6150, but the pressure is more to the upside than to the downside. Let's have a look at dollar Swissy. Dollar Swissy is within a downtrend, although shorter term I'd expect it possibly to come up to test this level of resistance. I would say there's a lot of pressure on it to head low. You can see here on the daily we've got a very strong reversal, so bullish day up, bullish day down on Friday. It wouldn't surprise me if we do see some pressure for that to head lower in line with that weaker dollar. Dollar CAD as well, you can see is now back within this range. So here it's a failed breakout to the upside. Okay, you can see a very strong level of resistance on a monthly basis. This is why it pays to look at the monthly, the weekly, and the daily. You can get that really clear perspective on a much longer, higher time frame. And you can see it's battling at that level. And although the CAD pairs were looking really bullish, they battled at those resistance levels. We can see it's now back within the range. And again, back down to the bottom of the range makes a lot of sense. Dollar yen. Okay, so this chart looking almost identical to dollar Swissy. There's this breakout to the upside. We had a consolidation breakout, and it seems to be coming back down. We could actually see further downside. What makes dollar yen special out of all of the ones I've spoken about so far is that its longer term trend is very smooth and generally very bullish. However, at the same time, we know that you may not know this, but you should, is Bank of Japan have been trying for absolute ages to get price below this 150 mark. They really do want that to be the case. So they're very keen for this to head lower rather than to head higher. And so there is pressure. So what I mean by that, the monthly trend is up. The weekly trend has no clear trend. It was an uptrend. It's now broken that trend. And the daily trend is now a downtrend. Okay, so what does it mean? Will the monthly win out? Will we see price turn around? It's a possibility. Shorter term, it looks as though it wants to head lower. So the reason I'm concerned about that is we could see a move lower that hits a level of support, double bottoms, and then reverses and goes up. But right now, shorter term is to trade this to the downside. Okay, so last week I spoke about gold, me being cautious about continuing to buy gold. It continues on a daily basis to trend higher and on a weekly basis to trend higher. It's a little bit overextended on a monthly basis, but what we could be very well encountering is something very similar to 2020 here, where it just continues up. So although I see some signs of exhaustion, it keeps wanting to go. I am still cautious of that. So does that mean it's not tradable? It means trade with caution, which means here was a break and a retest. This was a potential setup. I didn't take it. So I didn't take it because I am concerned about where we are. But if somebody had said, put a gun to my head and say, take the trade, entry above the high, stop loss below the low, risking 0.5% maybe instead of 1%, and definitely making sure that I take some partial profits if we hit 1-to-1. And there is, and finally, one final note on that is if it did then suddenly reverse, then I would just accept that. Overall, it is looking more bullish than bearish at this time, but it makes it tricky for really any potential for, I'm not feeling comfortable enough for any really nice reward to risk setups on it, but it is bullish to the upside here and overextended on the monthly. Okay, so there was a good trading opportunity there that I missed out on. Then we have a little bit of a correction here. Excuse me for 1 second. Okay, let's carry on. So you can see the trend starting to turn around here, coming up if we break these highs. This is a downtrend. We've also got a downtrend on the weekly, but we look very nice and bullish there. And from a monthly perspective, this looks good. We've had a really nice correction. I think I said last week that it would be very nice if we could come back down and touch these highs here, which it appears we haven't quite managed to do yet, but that does look nice and bullish. You can see, again, some strong resistance in this area over here. So that's going to be interesting. Excuse me. But again, MACD's bullish pretty much across the board. It looks okay. What I'd be looking for then here would be any pullbacks, and I would be very sure to make sure that I do take any profit as I approach this level, because I think there's going to be some strong resistance in this area, price resistance. So looking for any kind of pullbacks. There could be some good opportunities on the 4-hour time frame, so just go down and show you that. Go down and have a look here on the 4 hours, for example. You can see it's overextended. It's going to hit a little bit of market structure over here, but any kind of a pullback after that could be a good buying opportunity. And then certainly once we start to break this, so this is a bull flag. So what does that mean? It means that once we start to break through the downward sloping line there, if you want to be extra strict about it, once we start to breach to that, then we know that kind of that it's shifted. However, I would just say if we just approach it from a sensible, from a straightforward traditional approach, I would say we're there pretty much already, and then looking for some good buying opportunities because there's still some good room up here on the 4-hour time frame. So definitely, I would put silver on my watch list for this week. Gold is obviously looking very nice and bullish, and let's see what happens with that. If we do suddenly get a strong reversal because gold is overextended, then fine, we're prepared for that. Let's go back to the traditional layout and let's carry on. Let's have a look at natural gas. I always talk about it, but there's no real change in it. It continues to drip lower. You can see a beautiful break and a retest and a bearish candle here, so likely more pressure to the downside. Let's have a look at light crude. So light crude is stuck within this pennant shape. I'm going to quickly thicken that up just so that these are more visual, or are more visible to you. And so there's a bit of pressure either way. So we could see gold, we could see crude oil or oil, I pick up on what's wrong with me, continue to push higher, and then we could find a bit of pressure there. I'd be interested to see if we do break above these two previous highs, because that would put us outside and a break to the upside, or whether we're going to stay within this and ultimately break to the downside. So stuck within a wedge, it just means shorter moves until it does ultimately break out. And there's no clear trend here. We had a downtrend, we've come up, we've broken these previous highs, we don't have an uptrend yet, and we've broken the downtrend, so we're in a no trend status. All right, it'll be the same for West Texas. We'll be in exactly the same kind of boat. Let's have a look. Let's move on to the global indices and see what's happening there. Okay, so last week I spoke about it and I stand by my assessment. It's not one of these things where, oh no, I expect the sky to be falling. It's just that it wouldn't surprise me if if we're not clear just yet. In other words, if we continue down during September and then only recovered in October, it's a possibility. And that's mainly because of the seasonal or annual repeatable kind of data that shows September's are often terrible months. But that aside, let's have a look at this. So objectively speaking, we can see we've had a really good recovery. We're back up near these all-time highs and looks very bullish. And so what I would be looking to do is to see if there's any kind of a pullback and therefore looking for a buy opportunity. And it would be at these previous levels of support or resistance. And again, similar to gold, I'd be going with a little bit less, a lower, smaller position size. Essentially, and making sure that I take profits and move my stop loss to break even, possibly as well sooner. Here's the S&P, very nice strong recovery. From a monthly perspective, we've come back, we've had a bit of a correction. I always prefer a deeper correction for a little bit, either in price, in terms of price, but also a little bit longer as well, because that sets us up for a very nice long move to the upside. This is such a quick one. The market is almost impatient, wants to just keep going, but that doesn't mean that we have released enough of that pressure. NASDAQ as well, very nice. This is a sweet spot. Actually, out of the three of them, this one has had the most decent correction, at least 3 weeks down, and is starting to recover from there. So I quite like that one. But again, it's already overextended to the upside. Need some pullbacks, and then we'll see if it's going to be the case. But yeah, I would be just very much more aggressive in terms of that, or going on the offense with my trading on that stuff. Okay, mini Russell 2000 is trying to stay outside of its range. So this is a nice range here. It was a breakout. It's trying to stay outside of that, produce that swing low. Looking good. Okay, so bullish there. Then we've got the same with the FTSE. The FTSE, on the other hand, I'm not too concerned about it. Non-US indices are not as overextended. Don't get as much growth. They just don't. The economy is not as big and they don't get as much growth. And therefore, my expectation for this is a smaller correction, so I'm not too concerned about it. There will be some resistance where we are, but overall, I expect this to continue heading higher in the shorter term. The DAX as well, also really strong resistance there, very crisp, and we've had a correction right into the sweet spot and already pushing back up at those highs. So I'm more confident with non-US indices, but we'll see. As I said, September is what it is. Here as well, very nice. This is the ASX out of Australia. Very nice pullback and just continues to trickle higher. This one is broken outside of its wedge. I'm just going to get rid of that. We do not need that anymore. And you can see a nice pullback, a nice bullish candle. This wants to keep heading higher. Finally, I'll add the Nikkei to this, which had a very strong correction, nice big one down to the bottom, and already recovering quite well off that. Okay, so the markets seem determined to keep going. They will need to do a retracement on the daily. They're now in extension phase to the upside. They'll need to do a pullback on the daily, so no doubt we'll hear about that in the media. We'll see if that's going to be the case. If they start coming back down towards the lows, then of course the September play is back on the table. But I would expect them to potentially come back down to the 10 and 20 moving averages to the nearest support level this week. So they might head higher a little bit, sort of Monday, Tuesday, and then come back down. We'll see by Friday. We'll see if that's going to be the case. All right, moving on to equities of interest. These continue to look pretty much the same as last week. That's Anheuser-Busch. So you might be familiar with them, possibly. Bud Light came under attack because by far right consumers, let's put it this way, who took offense at them doing a commercial with a trans person, which is the silliest thing ever to take offense at. And so they took a bit of a hit from that, but overall they seem to be recovering just fine. In fact, it looks as though they're about to shift their sort of longer term downtrend into a medium term uptrend. So we'll see if that's the case. Apple. Beautiful correction here, really solid correction, and looks like it's good to continue up to the upside there. Amazon also looking relatively decent. I love the fact that it hit that sweet spot. Usually, excuse me, I will mark these sweet spots ahead of time. You can go back and have a look at where I expect price to come back to. And that is usually based on a proportionate correction. In other words, where do I expect a reasonable, healthy retracement to head back to? And I'll usually have a high at the top of the green box or a low, in other words, a shallow retracement or a deeper retracement. And I'll usually mark that out. It'll often overlap with a key level, which is why I would expect price to potentially head down to that. In most of these cases, they've touched just the top part of the box, but here you can see it's almost down near the bottom. The point is, anywhere in that zone qualifies as letting some of that pressure off. And so I'm quite happy with that. AT&T also continues to drip higher. It's trying to break through that key level of resistance. I think it's fine. It's going to keep going. Remember, we are in a bull market, guys, and this bull market is going to last another 5 to 10 years. So we have time. All right, we've got ARC stuck within this rectangular box. The question that I really have here is, you can see how much of kind of they've taken a hit since COVID. My question is, has there been any change in their constituents, or in their selection process, or in their management, that would give us any reason to suspect that they would break out of that? I'm curious. ASML, right? This company, if you're not familiar with them, they develop the machines that can then develop the chips that companies can buy and build and sell, NVIDIA and Intel and all of them as well. And so they, they are relatively well. That was a nice correction, and I would expect them to continue heading higher. Okay. So this is when you hear about semiconductor competition, and especially where Taiwan comes in as well with regards to China versus the US and the pressure. It's because a lot of these semiconductors come out of Taiwan. So that's really, from a technology perspective, that's where the battle often lies. Glencore. Just sitting at the bottom of its range, not expecting much there, possibly a reversal. Tesco continues to climb a lot higher. I highlighted this area as possible resistance. We'll see if that's going to be the case, and if we get a deeper correction, at least on a weekly or monthly basis from that area, we'll see. The next one up would be 400, which is possible, but that would make it almost parabolic. Then we have a look at Amex. Amex, really nice kind of pullback here. What I did mention was a little bit of a concern with these highs battling and divergence, that we could see a bit of a turnaround. But when I look at it from a monthly perspective, it's had a really nice correction, so it looks good to keep going. Berkshire Hathaway, excuse me, also a nice consolidation and a breakout and a pullback and a retest. Very good to keep going. So Berkshire Hathaway is solid. Coca-Cola, a little bit overextended over there. You can see how the candles on the monthly continue to get bigger and bigger and bigger. When they start to get smaller, that's where we'll start to slow down. It has gone a little bit parabolic, and I do expect at some point a correction, but that could be, honestly, that would be sometime in the next 6 to 12 months. And we can see here as well, Estee Lauder largely going sideways. No, BP, I beg your pardon, BP. Sideways in a range, at the bottom of the range, and therefore most likely place for this to go is to the upside there. I spoke about that last week. I would expect this to continue back up. Exxon as well, the pressure is going to help. The move is to the upside, so I expect that to continue to creep higher. Estee Lauder, trying to turn around here. I told you that I sold off on this because I was looking for this very last place for it to be a bit of a turnaround. I'm not worried if it does ultimately turn around. I have a buy order sitting above this level here, and we'll see if that's going to be the case. Okay, General Motors, very nice break and a retest and a bullish candle setting up here. So that intends to head higher over the coming week. We've got JP Morgan Chase. Same thing, monthly correction here. This is an example of where I would have preferred a deeper retracement. But it seems to be very stable. Look at how stable the price action is. So it makes sense for it to continue to trickle higher. QQQ. Also, this is what I was looking for here. I was talking about how this wasn't that bullish at the time, and I was saying, would we get another bearish candle, then a bearish candle, and a turnaround? Or within this, it was just using this as an example. So using this one as an example to that correction. But we can get rid of this for now because that's clearly not what is going to happen at this time. I'll keep the green area anyway. If we do come back down, this green area still qualifies, by the way, as a buying point. Adidas looking pretty good over here. Nice little buy opportunity with that on the weekly. We've got Meta. So Meta, my only concern here again was those slightly higher highs, but also getting that bearish divergence. But what it has managed to do here is largely a consolidation on the monthly and just kind of connected here. So it has spent a lot of time sitting in the same price area, which is the equivalent of taking a break, and therefore I think it looks pretty good. Okay, we've got Morgan Stanley, also strong correction here. Looks good. Here you can see how we broke that weekly low. We broke it, which means that uptrend is done, and we have no clear trend at this time. So in order for us to go back into an uptrend, we need to break this high, then have a higher low, and so on and so forth. But on the monthly, we had a nice retracement, and the monthly uptrend is still intact. NVIDIA looking really good. Beautiful, really nice correction here. Back into that sweet spot. Well into it as well, so not really like it just touched it. I'm happy with that. Netflix also looking very, very good as well over there. So Netflix looks good. PayPal trying to break to the upside. We've got a higher low here. It looks like it's going to break out. Good for you, but it's got to break outside of that range. So PayPal actually showing more potential right now, and I say potential, than ARC. Spotify, Would have preferred a deeper correction here for sure. I would have liked to see a deeper correction here. We're not going to get that at this time, but overall it seems fine. It seems to be doing very well, and I expect that to continue ticking up. Spider as well, also looking good, batting that 50-period moving average and a nice round number and a significant resistance level. So it's got to get through that one. That I would consider successful. I would consider that significant if we do break through that. We've got FedEx, nice little pullback, bullish candle. This is good for a continuation. Touch the green area. I'm happy with that. Good for a continuation to the upside. Tesla pullback. It's produced at higher lows. So last week I spoke about the fact I had it as neutral bullish. In order to become bullish, I needed to break this high, so it's got to produce a low and a high and a higher low and a high. We have to see that happen. So the reason the arrow and the question mark here is that is what is expected. If it is going to do that, it has to do that, and we'll see if that's going to be the case. It is also stuck here between a wedge. I'm going to highlight that quickly. There we go. Just make those a bit thicker so you can see them, and we'll see where it ultimately goes. Very interesting that a lot of it is, timing-wise, is similar to what we've seen in some of the other charts. Vanguard, very strong correction. Look at that stability, and this looks raring to go. So we'll see if that continues and follows through. Walt Disney sitting at the bottom of the range and showing finally the first sort of bullish weekly candle that it's had in quite a while. We'll see if it manages to find a bit of a base. You can see here on the monthly, the wicks starting to come out along the bottom, which means the buyers are starting to step in. It's putting on the brakes, but be nice to see a strong bullish candle here and to see it reverse and go back up to the top of the range. There we go. Now let's have a look at bonds. So bonds for me being something quite significant at the moment. I'm looking here, nice little weekly correction. I'll be looking for a bullish candle and a continuation to the upside. I'm happy with that. We've got EURUSD as well coming back down, potential bullish candle in this area, and a nice continuation to the upside. So what I'll be looking for is to see if support holds. If it doesn't, if it comes back down to test resistance, I'm happy with that. But if support holds, there might be a double bottom set up on the daily and a continuation, and that will happen this week. So we'll talk and see. When I say we'll talk and see, I mean as in I'm going to see this week if we get a bullish candle here, double bottom, and then continue up. So let me just sort of highlight this area to see if that's the case, if we get that. Otherwise, a deeper retracement down to these highs and a reversal. But for me, I think there could be something very interesting on the cards for bonds. That could be something that plays out really well, actually over 2025, if it's going to be a longer term trend that turns around. All right, let's finish up with crypto. So Bitcoin, looking good, still holding at this level of support. It's pulled back into the green area, and so it's had a really nice correction there. Ethereum had a deeper correction, all right, at the moment, bit of a deeper correction back down to this previous level of support. But if all of them are ultimately going to turn around, this is the kind of time at which over the next week or two where I'd expect them to do that. Solana is also holding, treading water where it is, holding above these levels of support. That looks fine. Finishing off with Cardano, which is the weakest of the bunch. I was looking to see if we would turn around in this area. Not really seeing much. It might come back down to this level of support and then we'll turn around. But it is the weakest of the herd, so to speak. So again, you can see how the markets are trying to possibly make another run. It's unusual. I would expect it to happen closer to December, so I am still cautious. But technically, they're giving all those bullish signals, and we'll see how they play out. And I am going to leave you with that. So thank you very much. Listen, have a fantastic week, and I will speak to you in next week's episode.